It's always been so ironic about diggers and dealers when all the nation's top miners are gathering to celebrate, I guess, the industry at the time when in Western Australia has been particularly hit hard by the downturn of the mining boom. What's the mood like this year?
Oh, look, it's definitely positive. This is probably the best diggers I've attended in 5 years because, gold prices up, iron ore's up, and you've got the, rare earths and metals like lithium that are taking centre stage. So it's a great atmosphere out there at the moment.
I was talking about the gold price. I mean, we've seen a bit of a rally here in the last couple of weeks or so, but I mean, that U.S. jobs report just on Friday really took the wind out of the gold rally. And even so, we've seen it kind of stuck in this range, about $1,200 to $1,300 an ounce since March. What are they going to be the catalysts for gold prices to go higher from here, Bill?
Oh, look, I guess it all hinges on the US Fed at this point of time. But I guess what's hurting us a little bit is obviously the Australian currency is really knocking the sail out of the Aussie gold price. But it's still in a very healthy range. It's close to 1,600 Australian. So that's a very good price for the cost base that I guess the Australian gold sector is running at the moment.
And do you see that we could actually break out of that range, though, above 1,300, Bill?
Look, I think in the next 12 to 18 months, I think it's got an opportunity to go a little bit higher. But again, it does hinge off I guess, the confidence in the level and where the US interest rates are going. But, if there's a bit of inflation starts creeping in, then that's going to be a positive for the gold. So it smells like it could break out in the next 12 to 18 months. But, a lot of people have been predicting that for a number of years now.
They have indeed, right? The gold bull, so to speak, Bill. I'm curious, you've wherever gold goes right now, being that it's range bound, are you on the acquisition path? Because you've paused for a bit on that, but are you looking now to acquire?
Yeah, look, we did stay away from the acquisitions for the last 2 or 3 years, but we invested very heavily in our own assets. So like you said, we pumped about $250 million back into our business and just put out a massive reserve and resource grade. And we added reserves for only $24 Australian an ounce. So people have been buying gold mines for about $500-600 Australian an ounce. So you can probably see why we've stayed away from the acquisition, because we've been organically adding ounces so cheaply. So look, our position now is, look, you always look as an executive in the mining sphere, but we're very comfortable with our portfolio and we're growing our production as well. So that's the bulk of our focus of where our management team and board are thinking at the moment.
Right, and you are very focused on gold, but what about adding on other precious metals?
Look, no, we're a pure gold company and we're purely in Australia. So that is our strategy. It's pretty simple. It's AU and AU. So no, we don't plan to diversify commodities at this point of the evolution of the company, or go offshore for that matter.
Yeah, and Bill, you mentioned about this huge upgrade in your gold resources. In fact, I mean, this should be able to extend the life of your operations and lift production to around 600,000 ounces a year. How do you see Northern Star taking the next step beyond that? Are you thinking you're going to be a 1 million ounce producer anytime soon?
Oh, look, that would be nice, but I guess one step at a time. So, yeah, look, as you said, we are growing our production next year to 600,000 ounces a year. But, look, we have got 2 other operations that, if the things fall in the right location in the next 2 years, could probably take us up to 750 to 800. So that's another big step up to our business. So we've still got a bit of work to do behind the scenes on those 2. But there's definitely opportunity in our portfolio in the longer term to get close to that mark that you mentioned.